Disclaimer: I am not a SEBI registered analyst. This content is strictly for educational and discussion purposes only. Please do your own due diligence and consult a professional advisor before making any investment decisions. Why are we so wary of highs when they may hide tomorrow's multi-baggers? Investors often shy away from buying stocks near their 52-week highs. The usual fear? It's already expensive. But history shows us that many of India's biggest wealth creators actually started their multi-bagger journey near these so-called danger zones. In fact, momentum often begins at new highs, while the majority of investors are still waiting for a correction. So why exactly do stocks at or near highs deserve attention? Let's dive into 7 interesting facts that can change the way you look at new highs and possibly help you discover future wealth creators. 7 interesting facts about stocks. Near 52-week highs, 1 momentum confirmation. When a stock pushes into new highs, it signals strength and momentum. This is where trend-following investors and big institutions start noticing. A stock making new highs attracts flows because it demonstrates leadership, not weakness. Example: when Asian Paints consistently broke into new highs, many dismissed it as overvalued. Today, it is one of India's most celebrated compounders. 2. Benchmark for strength. A stock testing its previous highs multiple times often shows resistance turning into support. This builds a stronger price base, indicating that selling pressure is reducing while buyers are becoming more aggressive. Example: Infosys has historically converted old highs into support zones, reinforcing confidence during its uptrend cycles. 3. Early signal of breakout potential. Many multi-bagger stories begin at highs. Investors who wait for dips often miss the real move. A breakout with strength and volume may just be the start of a long trend. Example: Titan's multi-bagger journey accelerated only after it crossed key highs around 2016. Those who waited for cheaper entry missed the compounding ride. 4. Volume matters. Moves near highs backed by expanding volume are more trustworthy. High volume indicates institutional buying, a strong clue for retail investors. Example: Reliance Industries' breakout moves in the past have consistently been backed by huge trading volumes, signaling serious institutional interest. 5. Sector leadership. When multiple stocks in a sector start touching 52-week highs, it's a sign of sector-wide strength. Leaders emerge from such clusters. Example: during the 2020-21 rally, IT sector names like TCS, Infosys, Wipro, and HCL Tech all made fresh highs, highlighting the sector's leadership. 6. Psychology barrier. Retail investors often fear buying at the top. This creates less competition for disciplined investors. In reality, new highs are just prices no one has been willing to pay before, until now. Example: Avenue Supermarts, D-Mart, kept making highs, and many retail investors stayed away due to valuation fears. Those who entered early, however, saw extraordinary gains. 7. Risk versus reward balance. The downside near highs is often more defined if you use stop losses, but the upside can be massive. This creates a favorable risk-reward equation for traders and investors alike. Example: a stock breaking out at RS 500 with a stop loss at RS 470 risks only 6%. But the potential upside, if it trends toward RS 800 or RS 1000, far outweighs the risk. Indian stocks near at 52-week highs as of now. Here are a few live examples of companies either at or nearing their 52-week highs. These aren't recommendations, just illustrations of what to look for when screening. Maruti Suzuki recently hit a fresh 52-week high, fueled by auto sector momentum. Tata Investment Corporation jumped to new highs after announcing a 1:10 stock split. Tata Steel climbed to a 52-week high, showing strong industrial sector momentum. Zuari Industries listed on NSE's fresh highs list, catching investor attention. Bharat Gears featured among NSE's 52-week high stocks, highlighting industrial traction. These names show how different sectors, autos, financials, and industrials, are contributing to current market strength. Thought-provoking questions for investors. Do you actively include stocks at near 52-week highs in your screening filters? Among auto, industrials, or financials? Which sector seems most promising based on current highs? Have you ever skipped a stock at highs thinking it was too costly and later regretted it? What volume volatility filters do you apply before trusting a breakout? Of the examples listed above, how many would you analyze further for potential wealth creation? Final thoughts. The stock market often rewards courage where others hesitate. While most investors avoid stocks at highs out of fear, the data shows that many future multi-baggers were born near these very highs. Momentum, volume, sector leadership, and risk management are your key guides. Instead of blindly fearing highs, use them as signals of strength. The key lies in disciplined research, proper stop-loss management, and filtering through strong fundamentals. Remember, highs are not the end, they are often the beginning.